Now, how inheritance tax works. Unlike other taxes in the UK, the tax on inheritances is a flat 40% tax. Ouch is definitely the word I would use in that situation. This means that after the bandings that we've spoken about, depending on your individual circumstance, any excess above those allowances is taxed at 40%, meaning for every £1 over the allowance, HMRC gains 40p. Under current rules, all properties, this includes your main residence, buy-to-lets, holiday homes, and also including properties held within a limited company, cash-based savings, and most investments such as ISAs, general investment accounts, investment bonds, all form part of the estate for inheritance tax purposes. HMRC sadly let very little go untouched when it comes to your estate. Some reliefs and exemptions still do apply under these circumstances. Under current rules, all defined contribution pension pots are exempt from inheritance tax. Just to clarify, a defined contribution pension is one that is a pot of money where the aim in retirement is to draw money as and when you please rather than a guaranteed income for life. As well as this, there are some specialist investments, which I will go into in some further detail, which after a certain amount of time invested are free of inheritance tax, and they are known as business relief investments. As well as this, if a couple are planning on leaving more than 10% of their net estate to charity in their will, it brings down their inheritance tax rate from 40% to 36%. So this can be a great way to reduce your inheritance tax liability whilst also giving money to a great cause. As an example here, a married couple with an estate worth 1.5 million. This could be made up of a family home, cash assets, and other investments. Each individual has a nil rate band of 325,000. Now, if they leave their assets to each other upon death, that nil rate band becomes 650,000 to offset against their inheritance tax. Now, they may also have a family home worth at least 350,000. They can also make use of their nil rate band of £175,000 each, which then comes to additional 350,000. So that 650 and 350 added together means that they can offset 1 million of their assets, which leaves them with being £500,000 over that limit. Now, when the 40% inheritance tax rate is applied to that 500,000, therefore there is a potential bill of 200,000, which is where we're getting these figures here. If you do think that any of these could apply to yourself, please don't hesitate to reach out to your advisor or do reach out to us.